Sir, there is a new RBI governor, and I'm just trying to figure out how to frame this question smartly. But basically, the government has reduced and rationalized taxation in the hope that you will create a consumption spree from the taxpayer. What's your signal? You're not finance minister, so I can actually ask you this question. What's your signal from the government to the new RBI governor for what they should potentially try and consider in the Monetary Policy Committee that happens on the 5th?
Well, of course, this is a time of the year or the time of the month when we shouldn't be commenting on what the central bank does. None of us has to comment on that. I think we have to leave it to the wise men in the MPC.
But are you hoping
to
for a
take
rate
a decision.
cut? Is the government hoping for a
My
rate cut?
views about interest rates are public. They have been debated extensively. Possibly you need to just look back a month or two and you will find
I'm
that
asking in the current
about my
context,
views about interest rates in the current context.
Are you thinking it's time for a rate cut?
Well, I won't comment on whether it's time for a rate cut or no. I'll only make two comments because both of which I'm on record several times. One, monetary policy and fiscal policy should work in tandem. And growth is the biggest imperative before the country today. Considering that, I think the government has done an admirable job through fiscal policies. I'm sure all other bodies and all other responsible people who are tasked with taking care of the country's growth story will take due cognizance of all the actions of the government and act in the best interests of the country. That's point number one. Point number two, I'm on record more than once, and not since now, since before I even became a minister. So I have said this to even Mr. Subbarao, Dr. Subbarao, who was an RBI governor much before our government came into power. I have consistently held that food inflation happens due to supply side constraints. The demand supply of food is inelastic. People will want milk in their tea in the morning. People do like, as income levels are increasing, to have better quality of food, including pulses, including butter or ghee or oils, including good vegetables, good fruits. They would like to have the good things of life, and this demand is quite inelastic. Therefore, considering food inflation while setting interest rates is fallacious. Interest rates have no impact, absolutely no impact in trying to bring down food inflation. I challenge anybody to prove me otherwise because we've looked at the numbers of warehouse receipts or funding against foodstuffs. As Consumer Affairs Minister, we used to monitor if we found any prices going up, whether banks have lent a lot of money or NBFCs have lent a lot of money, which is stocking foodstuffs. Those days are gone now. Nobody hoards or stocks foodstuffs with bank money or bank loans. Therefore, interest rates have no role to play in food inflation, and core inflation is the one that monetary policy makers should really focus on and address, and should not allow growth to become a casualty.